Good morning. Welcome back to American Family Radio Network Financial Issues. I'm Dan Celia. It's great to be here. We've got some economic numbers that came out today. Some pretty interesting economic data that came out in reference to consumer prices. I'm going to talk about that. Of course, we had the jobs report that comes out every Friday. I didn't even see or every Thursday. I'm sorry. I didn't even see the futures. But I can assure you they're down based on some numbers that came out from Citibank. Citibank's earnings off a bit, like over 3%. That's huge. Goldman Sachs, huge. Their profit was up. You know, it's amazing when I look at earnings numbers, and I've been talking about this from companies alike, not just the financial sector. But you notice that earnings are up, yet revenues are down. In other words, sales, for lack of better, are down. Why are they making more money? It's a good question. Could it be that they are just continuing to cut overhead? Yes, for sure, that's part of it. Could it be they're becoming so much more fee-driven, at least in the financial sector, that they don't need more people? So they can maintain their overhead relatively low while assessing fees on you and I. That would be one area for sure in the financial sector. Could it be technology? Could it be efficiencies through that technology? Automation, new software, new machinery, so on and so forth. Yes, that's got to be a part of it. Could it also be that everybody's working a little bit more productive as a result of being scared of losing their job? Could it be that they have more part-time jobs, thereby declining what they're paying in benefits coming off bottom line? Yes, that's true as well. I mean, it's a whole litany of things, and none of which are because they're seeing a dramatic increase in deposits, in sales, in manufacturing, driving the bottom line up. Anyway. It's frustrating to me because nobody seems to care about that, realize that, or understand that is going to come back to haunt the economy at some point in time. There's no doubt about it. And it could, in fact, come back to haunt some of these companies at some point in time. There's only so much manipulation of your balance sheet you can do, and there's only so much cost efficiency that you can generate in order to shore up or prop up your bottom line. There's also only so much stock you can continue to buy back, sell, buy back, sell, buy back, and sell. You can only do that. Well, I don't know. Maybe you can't. Maybe you can do that indefinitely. But, you know, somebody's got to take a long, hard look at that. So we've got companies making money without any prosperity, so to speak, trickling down to the job market. But here's the thing. I'm a behavioral analytical person. All of my analysis factors in some behavioral kinds of indexes and indices and trends that are going on in the marketplace. In other words, I try to keep my ear to the street as to what Main Street is saying and doing. If I'm going to be an analyst strictly based on textbook scenarios, charts, and past performance, then I'm going to be just like everybody else and continue to miss everything. I think those days are long gone. I think what we've got to get back to is this taking a good look at the behavioral science of all this analytical work. Now, back 30 years ago or longer when I started, I mean, that's what we did. Everything we did was, not everything, but a vast majority of any of our analytical work had a art form, the art form of analytical work. So yes, we looked at the charts. Yes, we looked at the analytical data and the indices and all those kinds of numbers for sure. We looked at all the statistical data and the trends as they were laid out mathematically. We always looked at that. But that's only about 40 to 50% of coming up with an opinion or an analytical opinion. The rest of it, to me, is an art. Well, that art has long since been gone, And that's why my stock picks, I had someone call, I don't know if they called here, I was talking to them at one point in time, not too long ago, a few weeks ago. And they said, I've got to tell you, I have really tried working through different charts and analytical work to figure out how you get stocks on your buy list and how you make your picks. And I got to tell you, I've been unable to do it. And every once in a while, I thought I had it, and it wasn't the case. And I laughed. That's because of the art side of things that go into that you can't put a chart to. So anyway, we continue to miss that. So one of the trends that we're seeing, if this is a trend, consumer prices, remember producer price index was up yesterday. Consumer price jumped 0.3% for the month of December. Now here's the real news. Core rate. This is big news. Nobody's reporting it as even headline news. It's big news. The core rate of inflation, that is without energy. Okay, this excludes energy and it excludes food. Advanced slightly faster in 2013 than did the headline rate, including those things, which was 1.5% for 2013. But the core rate advanced slightly faster at 1.7% for 2013. So you and I have seen in 2013 1.7% inflation. Now, here's the other thing. There is some concern because that's lower of an advancement than it was in 2012. That's 2 years straight that we've seen the inflation rate move downward, and that's the first time it's happened since the mid-90s. I don't know the date. I did know it. I did see it somewhere this morning, but I don't know when. I think it was 96. So that's going to cause some concern, I would believe, in the Fed. Here's the real problem, folks. Let me just get to the big issue. The big issue is that the inflation-adjusted hourly wage has increased 0.2%. Okay? The average hourly wage for 2013 increased 0.2%. Remember what I just said. Inflation, core inflation, without fuel, without energy, without food, right? Went up 1.7%. You think there's a problem here in River City? Listen, we've got a 12 months workers saw basically, or not basically, wait a minute, they saw no gain in their hourly wage. As a matter of fact, it went down from a purchasing power perspective. It went down, and their hours worked per week has gone down. And we have a Washington, D.C. that believes we need more programs to attack poverty. I got your program. It's called jobs. Private sector jobs. How about you stop politicizing everything and you get down to business of creating jobs? You go ahead and keep fighting poverty by way of programs, when the only program you need is to start to create jobs. Create a place in America where we have full employment so that the hourly worker, the salary worker alike has some bargaining power. And there's going to be incentives for corporate America, whether they be small businesses, fast food chains, or whatever it takes, to maintain an educated workforce, educated to whatever it is the business is that they're doing. Then we'll start eradicating poverty. But that would create the government to lean upon the very thing that they've been demonizing for the last 5 years. They would have to almost look like capitalist. They'd have to embrace free market economies. They'd have to embrace, they'd have to embrace profit. Can you imagine? That nasty thing called profits. They'd have to embrace that. They'd have to embrace the fact that small businesses, mid-sized businesses, large corporations need to be incentivized to create the jobs because they will be the engine of a growing economy. It's not going to be the government. I know that is hard to believe, but that is the case. We've got the Congress. This was out this morning by Heritage Foundation. I love this. It starts out talking about Kobe Bryant. You know, Kobe Bryant, the basketball player, makes $30.5 million a year. Not a bad salary. $30.5 million a year. So we now, that's in debate right now, which is not really in any kind of debate, because it looks like the federal government gets to go on another spending spree of $1 trillion. That's what's going to be coming out of Congress this week. This, these hard, tough Republicans, I'm being very sarcastic here, and the very liberal, progressive Democrats, I'm not being sarcastic, are battling it out for this budget and this deficit. But when it's all said and done, it looks like we're headed for a $1 trillion federal spending spree. Kobe Bryant, with his $30.5 million a year salary, would have to work, in order to get that $1 trillion, he would have to work 32,837 years at that rate. That's not factoring in any inflation. 32,000 years at $30.5 million would Kobe Bryant have to continue to play basketball in order to pay the $1 trillion spending spree, spending spree that is primarily going to be an omnibus spending bill that the House already approved, 359 to 67, to bring subsidies, grants, favors, pet projects to their districts. Well, wait a minute. Don't they care about the budget? Don't they care about our debt? Don't they care about America? No. No, they don't. Just pretend to. It's incredible. Anyway, the Republicans, the GOP, has put out a list of 32 candidates. I put it on my Facebook page, sent it out on Twitter at Financial Issues. 32 candidates for president. So far, they have a list. Out of that, there's only 9 that I would consider, and there's only 11. There's 11 that wouldn't even make my list.